Drill search was kicking higher pretty nicely during our last review, which was just on this bar right here. So obviously some type of announcement, gap to the upside, a couple of nice high closes, but as we can see, no follow through whatsoever. So it does mean that we've had to amend our wave count. That said, we are still looking for higher prices. It just means that the consolidation into wave B has taken a little longer than first anticipated, but still no reason why we can't attain this 180 region, maybe a little bit higher toward the all-time highs. So in regard to our wave count, what we're left with is a wave A. Then we have this symmetrical triangle. This is actually, at this stage at least, an Elliott wave triangle, which means it needs to contain 5 internal swings labelled A through E. Now it's not absolutely ideal. I don't particularly like this big gap here. Usually we like to see a little bit more symmetry, but that said, the basic shape and pattern is in position, and we do have those 5 internal swings. So A up to the wave B, C, D, and a wave E. So the ideal situation is that intermediate degree wave B is firmly in position, and we have seen a decent share of resilience over the past few sessions, going against the broader market, of course, and the confirming factor will be a break up through the high of wave D, get up through there, and absolutely no reason why we can't continue up toward our medium term target now, which is the all-time highs and the wave equality projection. Remember, the more confluence you have, the greater the chance that price is going to get there. So if we can get up through the high of wave D, every reason to go with it. Definitely for the more aggressive trader in the current environment, the XG not looking particularly strong at the moment, but that said, can't argue with the patterns here. We have an impulsive leg higher, then we have this symmetrical triangle. That's about as bullish as it gets. Confirmation, as I mentioned, a break above the high of wave D by following a break above that level right there, and we'll just keep the initial stop just beneath the apex of the triangle. Normally speaking, when triangles break to the upside, the apex will not be penetrated. So that's the logical place for the initial stop. Then if we can gain some upside traction, we'll be looking to trail it higher as we go. So definitely a trade for the more aggressive trader only. Obviously the one thing we don't want to see is the price to break down immediately through the low of wave E, or in other words, the lower boundary of this triangle. Should that transpire, then all bets are off in regard to upside potential, and we move back to a neutral stance. But at this stage, the pattern's looking good. We need to see this trend continue higher, or short-term trend continue higher, up through the high of wave D, then it should certainly be onwards and upwards toward our target area.